Someone's thinking that because exactly what you're talking about right now, this risk reward profile. If someone has never invested in anything, they're working their job, they've got a little bit of money. Maybe if they've got $1,000 to start thinking about investing, maybe they've got a bit more. Maybe they've been saving up and they're thinking that home that they want to buy is a long way away, but they got a little bit. Where should they invest?
If you have only a little bit of cash, the best returning asset class of all time is going to be you. Put the money into you, learning first before you go to invest. A lot of people these days will say, hey, it's Airbnb. Hey, it's buying small businesses. Hey, it's real estate. The highest performing asset class that you could ever have is you, because you have unlimited upside and it compounds over time. And so if you don't have a lot of cash right now, bet on you first before you go bet on somebody in the S&P. Now, after that next amount, I believe, because I'm old school, I started at Vanguard, I believe if you're reasonable, you probably agree with me. Like, do we think that we're going to beat the best stock pickers in the world who obsess on this every single day? Are we going to beat the titans of industry with their technology? No. So that's why I always go for low cost, low movement, so they don't trade a lot, index funds. I worked at Vanguard. They have the best cost structure. So I throw things in the S&P 500 in a diversified portfolio at a company.
How does someone do that? Someone who's totally new to this.
You go to Vanguard.com. You have no fees on their trading platform. In my opinion, avoid Robinhood, avoid anything where you're buying individual stocks when you don't know, unless you're doing it purely for learning and you're okay with losing everything. And you go to Vanguard.com and you select a diversified portfolio. It's cool too, because they'll actually help you do it based on your age and based on how much risk you want to take. So they'll have a 60-40 portfolio, which is like 60% stocks and 40% bonds if you're our age, for instance. If somebody's a little younger, they'll go 80-20 because you should take more risk with stocks when you're young. So you can literally, in one click, get a diversified portfolio, and then you can add to it. You could also use like a Wealthfront for that.
What's a diversified portfolio for someone who doesn't know?
That means that you never want to have all your eggs in one basket in anything in life, but certainly in investing. And so that means that they're going to give you stocks and bonds. It means they're going to give you emerging markets versus the US. So let's say India, China, Russia, Brazil, and the US stock market. And it means that typically over time, there's these charts you can see in finance where it kind of looks like a grid. And on it are all of these different colors. And what do all the colors represent that have no pattern to it? Every single year looks different. They represent every asset class you could invest in, from bonds to stocks to Chilean stocks to short-term money markets. And what you see over time is in every single market, everything moves. And so what you want to have is a portfolio that over time averages somewhere around 10%. That's the average cost of inflation. How your money, really, if you don't invest it, every single year that you don't invest, you lose money. Say you took a $100 bill right here and I had it right in front of me. And I looked at that bill since the beginning of the Federal Reserve, which is the government institute that mandates or manages all of our currency in the US. So if I go all the way back to the 70s, and I look at it today, what do I see? I see that $100 bill, if I just held it from then to now, is worth about $25. It's not worth $100 anymore. Why? Because of inflation. And so if we don't invest our money and we stick it under our mattress, then sadly the government eats away at it every single year, both sides, politically agnostic. And so we got to make sure that we put our money somewhere. That's why the stock market over time is usually what most people do.